Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. Well, the OPEC ministers and their allied partners are meeting in Vienna and they have agreed on oil production levels starting from 1st of July. The sources confirmed to CNBC that deal has been struck. A reporter from Reuters has also put down agreed upon levels for oil output hike at around 1 million barrels per day. Remember, the meeting has been on since yesterday, and this was at a precise moment when Saudi Arabia and Russia floated an idea of 1 million barrel of an increase, and that is when the Iran oil minister walked out. This was yesterday, but today we are given to understand that Iran has softened its stance and has agreed, and this comes on the back of the fact that the output changes would be effective from 1st of July. And that, the agreement in principle is of 1 million barrels per day of an increase for the OPEC and the non-OPEC members. That collectively makes 24 members oil producers in all. The important point also is that for the OPEC members, we have seen 164% of a compliance, clearly an over-compliance for the month of May. That will be brought down to 100%. And that, of course, will take care of much of that overproduction or the over-compliance that we have seen there. Another important point really is that 1 million barrels per day actually means 1% of the global supply. And that is the reason the markets have reacted the way they have reacted. So if we can bring the Brent crude and the US crude prices on screen for you, you will see that the markets haven't really taken it so badly. We are still trading in the green. The Brent actually has gained up by 2% as we speak in the markets there. Azleen Ahmed, editor, Crude Oil, Argus Media as well, now joins us to give her opinion on that. Azleen, hi, good to have you. What is your initial reading? We, of course, are still awaiting the OPEC press conference. That is where we will get details on. But what is your sense of the 1 million barrel per day of an increase? Is it as per the market's expectation?
Hi, it's Reza Amanat, the deputy editor for Argus here, actually. But to answer your question, I think the 1 million barrel agreement is interesting, and I think at the end of the day, this was a compromise between the two camps who decided that a long-term cooperation and a long-term relationship between all the producers was more important than to have a fallout in the short term, and for some people to have to gain something in the short term, for others to lose out.
Well, yes, quite clearly, this perhaps has been done a compromise, if you can call it, so that the longer-term institutionalization that the OPEC and the non-OPEC has been talking does stay in place. Also, just to tell you that Iran is an important member because 12% of the OPEC, complete OPEC output does come in from Iran. And even as we talk about the over-compliance, that also is involuntary because much of the cuts really have come in for countries like Venezuela, Libya, Iran, Angola. All these countries are looking at their internal issues. The output, of course, has declined, and that is the reason you have seen that over-compliance from OPEC come in. That, of course, perhaps will be taken off. But another important thing to watch out would be on where will we see this increase in supply from. And those are the details, of course, that we are still awaiting there. Hans Van Cleef, senior energy economist, ABN AMRO, as well, is online with us now. Hans, hi, good to have you. What is your initial reading into this one? 1 million barrel per day of an increase. How do you think that would impact the markets now?
Yes, hello. I think that indeed this 1 million, we should keep in mind that this 1 million is a nominal figure. So the actual increase in production will be lower, around 600 to 700,000 barrels. And there are only, since there are only a few countries who are really able to increase production. And perhaps that could be one of the reasons that Iran is on board as well now, that they may see it as an opportunity to at least keep production a little bit higher than it would have been based on the new sanctions of the U.S. So all in all, I think this is a good agreement in which basically everybody can go home and with a good story, which is good for the oil market, and basically creates enough supply to meet the ongoing rise in demand for the coming months.
Hans, also, what is your sense from the meeting tomorrow? Because we're not just done with the meetings yet. Today, of course, has been an OPEC meeting, but tomorrow, when the fourth OPEC and allies meet, the all 24 oil producers, is there any chance that you see of Russia pushing for 1.5, or you think one is where we might stand as of now?
No, I think one is what the actual agreement will be. Sure, Russia, wanted to increase production a little bit more, but on the other hand, I assume that on the sidelines of the discussions today, also Russia was already a little bit informed, and I don't expect too much surprises for tomorrow. So basically, we will see a confirmation tomorrow by non-OPEC on the agreement which is reached today by OPEC.
Stay on with us, Vans. Reza Amanat from Argus Media is still with us. Reza, hi. What is your sense, really? The compliance, for that matter. We do understand that the OPEC compliance has been at 160% for the month of May, while the non-OPEC compliance has been just about at 54%. Would you say that the non-OPEC here needs to really spruce up, because we have seen indications from within Russia about increasing supplies as well?
I think the focus has always been on how OPEC will manage this cut. I think the non-OPEC quotas were very loose, especially for Russia. A lot of the non-OPEC commitments were sort of not full commitments to cut, but actually letting supplies sort of decline naturally, as was the case in Russia. So the main driver for this deal is actually how disciplined OPEC could have been, and they have obviously been very disciplined about it, but partly because there were some unexpected losses in production within OPEC, and partly because members like Saudi Arabia overcompensated in terms of cuts.
Vandana Hari of Vanda Insights as well now joins with us. Vandana, hi. Another thing that has been talked about in the last couple of days really has been on how US perhaps has been pressuring the OPEC and allies to increase production, because that has led to a spike in prices. That is something that hasn't gone down so well with most of the OPEC members. How much importance, or how much, has that been the reason for this 1 million barrel per day increase?
The entire politics of U.S. preparing to impose sanctions against Iran, Iran getting incensed by the idea that the Americans had lobbied the Saudis to increase specifically to make up for any losses from Iran. I mean, to my mind, politics and personal agendas seem to have hijacked this meeting completely. Because if they were to think with a cool head and simply be pragmatic, look at the figures, it's obvious, and as you've been discussing with your guests a few minutes ago, OPEC has been over-complying. It's according to my calculations, based on the May data of output, almost 730,000 barrels per day over and above what they had intended to cut. So, I see this as almost a failed meeting in a way. It is, in the end, whatever 100% compliance, which is what they seem to be moving towards, is meaningless. Really, to my mind, it's meaningless because, again, based on my calculations, at least 1.5 million barrels per day has been sucked out of the markets because of unanticipated and unintended supply issues in various countries. So, and as you can see, you can't fool the market. As you can see, the Brent is already up almost $2, and I think the consumers are going to be disappointed.
Oh, well, yes, the markets have reacted on the different side already, because when we were going into this meeting, the expectation was that if there is a 1 million barrel of an increase in supplies, the markets would take it either ways. But we also have seen that how the hedge funds and the money managers actually have been increasing the long positions as they went into this meeting. Ms. Mahesh as well now joins us from Sydney. Ms. Hi, you must be awake really late in Sydney right now, but I'm assuming the interest that the OPEC meeting does evoke across globe for most of the oil enthusiasts. What is your initial reading? 1 million barrels per day of an increase in supplies. What are you taking home onto that?
I think Saudi Arabia has managed to really walk the line here in terms of balancing so many different interests politically. whether it be even the private meeting that the Saudi minister had with the Iranian minister as well. And it just seems like, given how vague OPEC has left its communique, that each party can go back now and sort of spin their own story. Venezuela and Iran can say that this is just returning to 100% compliance, whereas the Saudis can tell the U.S., for instance, that, you asked for a nominal 1 million barrel, but they cut here, push in an increase in supplies, and here's the 1 million barrels per day. Whereas in reality, it's going to be a lot less than what the market should have expected.
We are minutes away from that OPEC press conference. I can almost see the ministers actually sitting, taking their seats, ready to tell what they have decided, the quantum, what really led into those meetings, etc. But, Mr. before we get into that, how have you seen the reaction of the crude oil prices onto that? 2% up for the Brent prices, a percentage point up for the U.S. crude prices as well. Is that how you thought the markets would react to a 1 million barrel increase?
I think a lot of it was already priced in terms of the 500 to 1 million barrel per day number was already thrown in. So I think this is a disappointment for the bears, clearly, because they would have wanted something more concrete, something more in terms of a data watch approach. But I think the press conference...
Ms. Wynn, I would want to just get in there. The press conference from OPEC has begun. Let's listen into this, and please stay on with us because we will come to you with reactions after this.
Thank you. The 174th meeting of the Conference of the Organization of the Petroleum Exporting Countries, OPEC, was held in Vienna, Austria on Friday, 22nd June 2018, under the chairmanship of its President, His Excellency Suhail Mohammed Al-Mazrou'i, Minister of Energy and Industry of the United Arab Emirates, and head of its delegation. The conference offered its congratulations to the OPEC Secretariat for the success of the 7th OPEC International Seminar. It also offered thanks to OPEC member countries as well as all speakers, sponsors, and delegates that had made the seminar such a seminal event. It noted that the seminar has become a truly global platform for discussing the challenges as well as opportunities facing the oil and energy industries. The conference considered Congo's request to join the organization and decided to approve its admission with immediate effect. The conference considered the Secretary General's report and recommendation made by the Joint Ministerial Monitoring Committee, GMMC, supported by the Joint Technical Committee, GTC, which was set up to monitor conformity to the voluntary production adjustment made by 24 OPEC and non-OPEC producing nations through the Declaration of Cooperation, as well as the report of the Commission Board and various administrative matters. The conference analyzed oil market development, the oil market outlook for the remainder of 2018. The conference noted that the oil market situation has further improved over the past 6 months, with the global economy remaining strong. Oil demand relatively robust, albeit with some uncertainties and with the market rebalancing evidently continuing. Moreover, the return of more stability and more optimism to the industry has been welcomed by all stakeholders. Reaffirming OPEC's continued commitment to stable market, the mutual interest of producing nations, the efficient economic and secure supply to consumers, and a fair return on invested capital, and noting the overall improvement in market condition and sentiment and the return of confidence and investment to the oil industry. Recalling the 171st OPEC conference resolution reached on 30th November 2016 for a production adjustment of 1.2 million barrels per day, Noting the OPEC member countries have exceeded the required level of conformity that had reached 152% in May 2018, accordingly, the conference hereby decided that the countries will strive to adhere to the overall conformity level of OPEC 12 down to 100% as of July 2018 for the remaining duration of above-mentioned resolution and for the GMMC to monitor and report back to President of the Conference. The conference thanked all OPEC member countries as well as participating non-OPEC countries in the historic Declaration of Cooperation for their dedication to the voluntary production adjustments, which can be viewed in continued high level of conformity levels so far this year. The conference extended its deep appreciation to the GMMC, the GTC, and the OPEC Secretariat for their valuable engagement in providing the transparency required for implementing the voluntary production decisions in a timely and equitable manner. It also noted the important work that has been undertaken by these committees to review alternative and/or adjusted metrics to measure the impact of the Declaration of Cooperation. The conference supported the findings that a single metric is not sufficient in terms of measuring market stability, and therefore a more comprehensive and forward-looking set of metrics is recommended to enhance the analytical depth and understanding of the complex global oil demand and supply dynamics beyond the short term. The conference also acknowledged the crucial role played by participating non-OPEC nations in the Declaration of Cooperation and stressed the importance of the fourth OPEC and non-OPEC ministerial meeting that would take place tomorrow, 23rd June 2018, at the OPEC Secretariat. The conference welcomed the positive dialogue and technical expert interaction that have evolved among all parties of the Declaration of Cooperation. This includes the most recent third technical meeting of OPEC and non-OPEC producing countries on the 19th of June, which focused on the oil market fundamentals and medium-term prospects. The conference decided that its next ordinary meeting will convene in Vienna, Austria on the 3rd of December 2018. Finally, the conference expressed its continued sincere gratitude to the government and to the people of the Republic of Austria, as well as authorities of the city of Vienna for their warm hospitality and excellent arrangement made for the conference meeting. With this, I conclude the press communique.
Well, those are, of course, important statements coming from OPEC, and we have that press conference already in. Those are the Q&As being asked. What we do understand from the press conference now, and there is clarity on the fact that the final decision that the OPEC and the allies, and rather OPEC has taken, is that they strive to bring the compliance to 100%, which was 154% in the month of May. So that means that there would be an increase in the supplies there. Also, very clearly, there is a statement from the Saudi Arabian oil minister saying that the OPEC and the non-OPEC increase in supply will not be above 1 million barrels per day. So that pretty much clears what we have been telling our viewers, that 1 million barrels of a supply increase is what OPEC is looking at. And this is something that has everybody on the same page. The OPEC members agree to that. So clearly, this is the final decision that has come in from OPEC. The next meeting now is on December 3rd. There are no details clearly on the individual member quotas that were given out. So that is something, those details, of course, are still awaited. OPEC perhaps would want to thrash onto that one. But as of now, 1 million barrels clearly is what we have seen come in from that meeting. Thomas Pag, a commodities economist, Capital Economics, also is with us. Thomas, hi. You heard the press conference. You've heard the details of what really came through from that OPEC meeting today. What is your first reaction to the same?
Well, it's definitely towards the lower kind of end of what we were expecting. A commitment to stop overproducing, but it's not, clear whether that means, for example, Saudi Arabia just increases its production up to its limit, or whether it it goes over and above that in order to make up for some of the lost production from countries like Venezuela. That's going to be the crucial kind of aspect. So this, the boilerplate number of 1 million barrels a day could actually turn out to be significantly lower if Saudi Arabia and other countries just produce to their own quotas.
Well, yes. Thomas, this is the meeting that we have been waiting for last couple of months and more. Now, with that out of the way, what are the markets reacting to? We've seen some gains come in for the crude oil prices. And what would you want to watch out from tomorrow onwards, from Monday onwards, let's say?
So tomorrow we've got the second half of the conference with the non-OPEC producers. So we may well see some more production promises coming from countries like Russia. But from Monday, I guess the focus is going to return to Iran and the sanctions, whether the sanctions there are going to really restrict exports or not. Venezuela, whether the production decline there is going to continue, or whether they're going to be able to get some of that production back, as the Venezuelan oil minister commented earlier. And then the focus will also be on US shale production and whether that continues to surge, and whether they can fix some of the logistical issues that are starting to hamper output there, as well as
Thomas, I just want to come in because the major takeaway from this, of course, would be the reaction on the crude oil prices themselves. Have we seen the near-term bottom now? Would you see the prices gain from here?
Probably for the near term, we've seen a bit of a bottom.
Okay.
But depending on how this OPEC increase plays out, we could see prices go a little bit higher over the next 6 months before they start to probably drift back down again next year, we think, as demand in the US and China starts to slow and US output surges.
Point taken. Vandana, what is your sense as well? Do you see the prices taking support from this one now? This big event of being most awaited is done now. Of course, we could hear some statements coming in tomorrow, but what is the impact on prices that you see going forward?
Well, I think the fact that Brent has already shot up by more than $2 versus its Thursday's close tells you a lot. Basically, the market is, for the time being, for all practical purposes, ruling out any major relief to the ongoing supply tightness. And let's not forget, it's not just the ongoing tightness, but at least two countries which are expected to pump progressively or supply progressively less to the market. So one is obviously Venezuela. It's no more, doesn't even make sense to look at Venezuela's May production because, you see that in June they have slid even further, and that's expected to be the trend going forward as well. And that holds true for Iran as well. Unless there is a miracle, the US and Iran actually get together to negotiate across the table. Nobody is actually factoring that in as a possibility right now. We are seeing, we are expecting to see the market lose another 500,000 to 1 million barrels per day of Iranian production as well. And all of that, rather conveniently and unfortunately, seems to have been just left to the side of the table in this meeting.
Oh, absolutely. Those are the things that have been not addressed in the initial communique that came in from the OPEC. But as a reaction, we have seen the crude oil prices gain up. And as our experts tell us as well, that we perhaps have seen a near-term bottom come in for place. Thank you so much, gentlemen, Ms. Win, Reza, Vandana and Thomas as well for joining us and giving us your initial reactions to that most important and awaited OPEC meeting that we have seen gone through, and 1 million barrel per day of a supply increase, as that has been expected by the street, is what they got today. With that, completely out of time on this edition of Commodity Champions. Thank you for watching.